something remarkable is happening on the roads and in the showrooms of Europe. The automotive landscape is shifting in ways that would have seemed impossible just a few years ago. After years of uncertainty, the continent's new car market is finally showing strong signs of life. Showrooms are bustling again, and the energy is palpable as buyers return with renewed confidence. In November 2025, sales across the EU, UK and EFTA climbed by 2.4% compared to last year, reaching 1.1 million new cars registered. This marks a significant milestone, signaling a real turnaround for the industry. The real story? Electric vehicles are no longer a niche. They're now the mainstream choice for families and individuals. More people than ever are considering EVs as their next car, drawn by lower running costs and environmental benefits. The quiet hum of electric motors is steadily replacing the roar of gasoline and diesel engines. Cities are becoming quieter, and the air is noticeably cleaner as EVs take over the streets. This shift is forcing carmakers to rethink strategies and governments to update policies, transforming personal transportation across Europe. Automakers are investing heavily in new technologies, while cities expand charging infrastructure to keep up with demand. While sales haven't fully rebounded to pre-pandemic levels, 5 straight months of growth show a solid foundation is being built. The optimism is cautious, but it's real, and it's spreading. The question now, can this momentum last, especially with economic and political challenges ahead? Rising interest rates, supply chain issues, and shifting regulations all pose real tests for the industry. Europe's car market is a tale of two trends: a steady recovery from a downturn, and a disruptive revolution led by electric power. The old and the new are colliding, creating a dynamic and unpredictable market. This surge in sales signals a continent embracing a cleaner, quieter, and more advanced future for driving. The choices made today will shape the roads of tomorrow. The numbers tell a compelling story of change, and it's only just beginning. Europe's journey toward a new era of mobility is underway, and the next chapter promises to be even more transformative. To truly understand Europe's remarkable transformation, we need to dig into the numbers and see what's driving this change beneath the surface. The real headline is not just about how many cars are on the road, but what kind of cars people are choosing to buy. Demand for electric and hybrid vehicles is not simply growing, it's exploding, signaling a major shift in the market. In November 2025, battery electric car sales in the EU jumped an astonishing 44.1% year-on-year, a surge that few could have predicted just a few years ago. Hybrid electric cars also saw a dramatic rise, up 38.4%, while plug-in hybrids increased by 4.2%. These numbers show that electrification is happening across the board, not just in one segment. When you add it all up, electrified vehicles made up 65.6% of all new car registrations in the EU that month. That's nearly 2 out of every 3 new cars, up from 56% just a year earlier, a leap that's hard to ignore. The pace of change is accelerating rapidly, leaving traditional gasoline and diesel cars further behind with each passing month. This isn't just a temporary spike, it's a deep, lasting shift in consumer preference. People are making choices based on environmental awareness, rapid advances in technology, and a wave of supportive government policies. The electric wave has truly arrived, reshaping Europe's automotive landscape and changing the way people move through their cities and countries. The question now is not if, but how quickly electric cars will take over, and which companies and countries will lead the charge in this new era. The race is on, and the finish line is moving closer every day. The EU is the engine of this electric revolution, driving change not just within its borders, but setting an example for the world. In November 2025, car sales in the bloc rose 2.1%. But the real story is that 21% of new cars sold were fully battery electric, a figure that would have seemed impossible just a few years ago. That's more than 1 in 5. A milestone for mainstream adoption, showing that electric vehicles are no longer just a niche choice for early adopters. Growth is strong in major markets like Germany, Italy, and Spain, not just the Nordics. These countries are seeing EVs become a common sight on city streets and highways. The appeal is clear: lower running costs, quiet rides, and zero tailpipe emissions. For many, the switch to electric is about both saving money and helping the environment. EU-wide policies and incentives have laid the groundwork for this surge, making EVs more accessible and affordable for millions of people. Nearly 2/3 of all new EU cars are now electric or hybrid, a powerful statement about how quickly the market is changing and how consumers are embracing new technology. Legacy automakers are being forced to reinvent themselves, investing billions in new tech and manufacturing, and racing to keep up with demand for cleaner vehicles. The EU isn't just a market for EVs, it's shaping the global future of mobility, inspiring innovation and setting the pace for a cleaner, more sustainable world. Beyond the EU, the electric boom is even more dramatic in some countries. The UK's battery electric market share hit 26% in November 2025, more than 1 in 4 new cars. Norway's numbers are astonishing. 98% of new cars sold are electric. Years of aggressive incentives and infrastructure have made EVs the default in Norway. Norway's success is a global case study in how policy and public buy-in can drive a complete transition. The UK and Norway show there's no single path to high EV adoption. Both are beacons, illustrating the potential of electric mobility to reshape national markets. Their experiences offer lessons for the rest of Europe and the world. The shift to electric vehicles is creating new winners and losers among car makers. Volkswagen Group's registrations rose 4.1% in November 2025, thanks to heavy investment in electric models. Renault Group also saw growth, up 3%, with its popular Zoe and Megane E-Tech. Early investment in EVs is paying off for these brands. Stellantis, however, saw registrations fall 2.7% after months of growth, signaling trouble in keeping pace. The stakes are high. Those who adapt quickly are thriving, while slower movers risk being left behind. November's results show who's leading and who's struggling in Europe's new automotive landscape. The pressure to innovate has never been greater. Tesla, once the undisputed EV leader, is now facing real competition in Europe. In November 2025, Tesla's registrations fell 11.8% year-on-year, even as the EV market boomed. While Tesla still performs well in Norway, it's losing ground elsewhere to both legacy brands and new challengers. Enter BYD from China. Its European registrations surged 221.8%, nearly matching Tesla's market share. BYD's rapid rise signals a dramatic shift in the competitive landscape. Tesla now faces a two-front battle: established European giants and aggressive Chinese newcomers. The fight for Europe's EV market is truly global. BYD's success is just the beginning. Chinese automakers are making a major push into Europe. They're bringing advanced, well-designed EVs that compete head-to-head with established brands. With strong government support, battery supply dominance, and lower costs, Chinese companies can offer competitive prices. The competition is about more than price. It's about technology, speed, and user experience. Chinese firms see cars as smart devices, appealing to a new generation of buyers. This influx is forcing tough conversations in Europe about free trade, competition, and protecting domestic industry. Navigating this challenge will be critical for Europe's auto industry in the years ahead. Just as EV momentum peaked, a policy shock hit Europe. In late 2025, the European Commission scrapped its planned 2035 ban on new combustion engine cars. The reversal followed industry pressure, with arguments that the deadline was too rigid and risked jobs and affordability. Some automakers welcome the move as pragmatic, allowing more flexibility and a slower transition. Others, especially those betting on a fully electric future, criticized it for undermining certainty and climate goals. The decision has divided the industry and raised new questions about Europe's long-term green ambitions. Automakers now face a more complex, uncertain path forward. As 2025 ends, Europe's car industry is more dynamic and uncertain than ever. The electric revolution has unstoppable momentum, but the road ahead is complex. Legacy brands must adapt quickly or risk being left behind, while new global competitors intensify the fight. The policy U-turn on combustion engines adds another layer of uncertainty for automakers and policymakers alike. The industry stands at a crossroads: double down on electric or hedge bets with combustion and e-fuels. The winners will be those who innovate, adapt, and deliver what consumers want in a fast-changing landscape. The journey ahead will be transformative. Europe's automotive story is far from over, and the next chapter will be written on electric roads.